Hey folks, David Frost, MyStrategicForecast.com. You're here for another episode of Common Sense Technical Analysis. Today is Wednesday, July 16th, 2014, and you're looking at a 10-minute chart of the SPY. We got a lot of stuff today. There's a lot of stuff going on, so let's get moving. Last night, Intel reports earnings, and the stock was up. We talked about it last night. Intel was up. And I said two things could happen, and they're relatively obvious, but two things happen. One is Intel could go up in the morning and then kind of fail and then put in what a topping tail would look like and finish down below or finish on a low of the day. That didn't happen, so it just got strong and went stronger. In fact, let's just take a look at Intel real quick. Okay, so Intel gaps up, and it just gap and go. It was just up and then up and away, and then the last buy program came in the last few minutes of the day, and that's the end of it, and it finishes up on a high of the day. Let's just take a look at a long-term chart of Intel so we can see where we are, because I think it is important. Well, that looks ridiculous, doesn't it? That's a weekly chart, so that's obviously going to have to come in. We know that. And let's take a look at a monthly chart, and here we go. If we just squeeze it back a little bit, all right, we'll see that we're nowhere near what the ultimate highs were in Intel. That was back here in 2000, right? So this, okay, this could go higher, okay, but guess what? You're coming into this top here. You have this pivot with this resistance here. Right now you're into this one here. So, you know, there's not a lot of upside left for Intel, although if you went up here, that's another, $3.50 or so. So, but that's where we are in Intel from a longer term perspective, but we're going to have to consolidate at the minimum first, and we're probably going to have to come in back to this pivot high, at least first, which is breaking $30. It'll be in the 29, 37, 38 neighborhood. All right. So let's go back to, our spider chart, and talking and typing. I hate that. All right, so now let me unsqueeze this. All right, oh, I'm squeezing it. Unsqueeze. There we go. Okay, let's get a little bit bigger. All right, so today we had the update, but you know what? Here's the deal. All right, you got a couple of things going on. You had merger talk today with Time Warner and Fox, 20th Century, Rupert Murdoch's organization. You had Intel reporting earnings. You had Apple in a partnership agreement with IBM. So you had IBM up, you had Hewlett-Packard up, you had Microsoft up, you had IBM up, and those are the big tech guys, right? And here's the deal. Back in January, okay, let's just turn back time here for a second. All right, let's go to, right here. You had the same thing occurring here. This distribution here was all the money moving into the Altrias and the IBMs back then, and the Conocos and all the big stodgy companies, all the Dow companies and they were moving in. The distribution was coming, and the small caps were distributing, and the Nasdaq was distributing. And guess what? Boom! Here we fell, and then we picked back up again. And now you have something very similar going on. You have money was moving into those big tech names, and it looks like it's kind of looking for a place to go because some of the momentum names were down. And speaking of which, not really that momentous anymore, but Apple had an interesting day. So check this out. So Apple, all right, goes up with the market, right? And it hits, what did it hit? It hit a high today of 97.10. And then it melts down all day, and then in the last 30 minutes, it collapses. Boom, down. And then what does it look like on a daily basis? And I'm telling you all this for a reason. What does it look like on a daily basis? Wow, it has basically an outside day. We went higher than the high yesterday and finished on the low, lower than the low yesterday. That's a signal. That's a topping. It's not an official topping signal, but it's a turning signal. It's usually signaling a shift in the stock, okay, that was distribution today. There's no question about it. Distribution means that as they push the stock higher, the institutions are selling into the little guy. That's exactly what's happening. Okay, that's distribution. So that's what you had in Apple. So that's a signal. And I always, every night I'm talking about these signals. A signal, we're looking for signals of topping, right? So we have money moving into the big tech names. That's a signal. We have the small caps, which we'll look at in a second. That's another signal. All right. You have Apple. That's a signal. All right. All these things, SanDisk getting crushed after hours, by the way. I guess we can look at it real quick. Here's SanDisk. Okay, boom. It's back. It's down at the 98.27. Or no, that's the 50. SanDisk is at, I can't get, let's see, 98, 97, 70, 97, 83, 84, something like that. So that's after hours. So SanDisk's getting crushed. And interestingly enough, SanDisk was upgraded today by, I think, 2 firms. I mean, it's ridiculous. They do this all the time, and especially during options expiration. They upgrade a stock. Now, let's just take a look at the longer-term chart of SanDisk, all right? Where's that going? I mean, come on. Forget about today, all right? If you take this away, all right, yeah, of course it could go higher. We don't know how high these things could ultimately go, but we know that this just can't continue. And then when they start with the upgrades at levels like this where the stock broke out from 70 up to 104, okay, when was this? Okay, October. Okay, so the stock's up 35%, in 6 months or 8 months. That's ridiculous. It's not worth 35% in 8 months. What did they do in the last 8 months to be valued 35% more? They're not. So that's going to come back down. It's just a matter of when. And so we're getting into the cycle turn, and that's when they'll come home to roost. So here's the deal. Well, let's look at IWM, which is small cap. So the Dow is up today. Okay, the Nasdaq was up today. The S&P was up today, and lo and behold, the small caps were down. IWM was down, all right? So what is that? That's a monthly chart. So let's go to the daily chart. So here we go, all right? So now, where are we? We're at this pivot top here, all right? That's where we are. We're testing these lows here, okay? And if we have another few days of sideways action here, then I think we go down here to the 108 level, and then after that, lower than that, 104, something like that. So we'll play it as it comes, but this pattern is forming to where you get let's say a sideways to up day on Thursday and Friday, and then all of a sudden you got 1, 2, 3, 4, 5, 6, 7. Yeah, I mean, Friday, Monday, this thing, if we get sideways tomorrow, Friday, Monday, look for this thing to go down. That's my take. That's when I think this thing's going to turn. I think it's going to be any time, really, between now and Tuesday, Wednesday of next week. I look for a big turn in the market. I look for a big down day. You're going to look for a 1.5%, 2% down day, and that's going to shake out some people, and it's going to get them talking, and it's going to get them discussing all kinds of bearish stuff, and that's what we're going to look for. So, let's look at gold. Enough of the market. We did the market to death today, I think. Gold, same deal. Okay, we're not buying up here. We were never buying up here. I didn't buy this breakout. It came down, and I think it's got lower to go. I think we're going to fill this gap, and I'm looking at 122 to 123. That's my number. That's where I want to buy gold at, and if it happens within the next couple of weeks, I think we can get a nice big rally in gold, and I'm looking for that to coincide in large part with the market coming down. Now, listen to this story to see if this makes sense, okay? Right now, the Fed, Janet Yellen and the Fed and company are talking about tapering the taper, right? They're going to pull back on the bond buying program. I'm sorry, not tapering the taper, but they're going to continue tapering. And they're now where everybody's talking about when they're going to raise interest rates. Maybe it's second quarter of 2015. Who knows? So here's what I see happening, okay? The market comes down. Of course, they can't have that, so they've got to support the market. So they're gonna blame the market coming down on a poor economy, and then the Fed's gonna come to the window and reverse the taper, and they're gonna postpone raising interest rates indefinitely, and then the market's gonna turn around for a few days, and gold's gonna take off because it's gonna be a sign of inflation, and the Fed's gonna reinflate the market, and gold's gonna shoot up a couple of $100 over the next month or two, and that's the way I see it playing out. We'll see. I'm making up the story as I go along, but I can see that story playing out. We've read this book before. So I think that's a wrap for today. We're going to leave it there today. This is David Frost, mystrategicforecast.com, Common Sense Market Analysis.